Okay, so let's get started. We'll start with first getting back to the key messages from the last session for some of the people who may not have been in the first session. So the first thing we said in the last session was set financial goals. It's really, really important to set goals. If we don't have the goals, we don't know where we are going, and then we will not be able to accomplish anything. I really love a dialogue between Alice and the cat in the book Alice in Wonderland. And Alice is lost and she asks the cat, "Is this the right way?" And the cat says, "Where are you going?" And Alice says, "I don't know." So he says, "Any path that you take will take you to your destination. If you don't know where you're going, then any path will take you there, right?" So I really think that having the financial goals, whatever those goals are, and ideally it should be that you have one long-term goal of 10 years or 5 years, and then also goals by a year or even 6 months, so that you're constantly looking, because whatever you focus is manifested into your life. If you're not focusing on something, it will not come, because focus channelizes your energy to take action towards that particular goal. Even if you miss it, you will be closer to it versus if you are not even thinking about it. Second, we talked about building financial literacy. And the reason for that was no one can take care of your money better than you, right? You can ask the relationship managers or experts in real estate to help you. But if you don't have the financial literacy or understand what are the questions that you need to ask and how are you going to hold these people accountable, you will not be able to get to the results that you so desire, right? Third thing we talked about was invest in quality assets and incubate to get a high return. So it's about quality assets. Even if you're purchasing real estate, it has to be location, 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 right? It has to be in a country where there are good laws that can protect your investment, right? In case certain issues happen. If it is on stocks, it has to be really, really good company that you're investing in. The people who are working over there, the quality of innovation that is happening. So quality asset will always protect you. Engage actively in the market. What it means is that you have to experience it yourself. You're not just passing it on to someone else to take care of it and become completely passive. You need to have what are the triggers and what are the questions that you need to continuously ask to hold the people accountable for the job they're doing on your behalf. Copy the best. I give you the example of Manish Prabhai. He is one of the best investors on Wall Street. And what he did was he copies people like Warren Buffett and some of the big investors, because in any institutional investor who has a portfolio of more than $100 million, they have to file a Form 13F in Securities and Exchange Commission in the US. You can type on your Google and say 13F, and you'll get a list of all these amazing people. On a quarterly basis. They'll say what are the stocks they're purchasing or the mutual fund they're purchasing, what are they exiting. And by copying them, you are actually learning a lot, because these are the experts, the gurus of investment, right? Then we said that develop an investment strategy. Each one of us has to have a strategy. What is your strategy? Is a strategy of diversification, a strategy of concentration into a particular stock or a mutual fund or thereabout? Or what are you going to do in terms of risk mitigation? How are you looking at the risk? What is your propensity for or appetite for risk taking, right? At what stage of life are you? You are into protecting your money that you have saved, or you can take more risk there. There's no one strategy which is right. I was once talking with a great P&G person, and the person told me that, the best thing is diversification. There's a blanket statement. And then I said, well, that's a very good thing, which is taught in different places. Tell me, out of your total wealth that you have made, how much is earned from Procter & Gamble? Okay. And I was talking because of the stock option earning. And he says 99%. I said, I rest my case. So you made your money through concentration, but you're saying that one has to diversify. I can understand the logic the person was saying is because when you're diversified, it actually protects your money. But on the other side, it also is, many people have, if you're knowledgeable about a particular company, people who have invested in NVIDIA, one of the people on the call today, she had the foresight to do that, and it has gone up significantly, like 6, 7, 800%, right? But you have to know which asset to invest in. Distinguishing between good and bad leverage, it simply means the debt. We talked about like a good leverage would be that if you are taking a mortgage to buy a house, that's a good leverage. Because if the property is good, it's a quality property and its price is going to go up in the future, then by taking the debt, you are, by investing a small amount like 20% or 30 or whatever percentage you put in as a principal versus the mortgage that is given by the bank, and if the property goes up, the returns are much higher compounded, right? A bad leverage is one where you're taking debt on a credit card and buying Louis Vuitton, right? Or you're buying consumables or products, not the shares, right? So that can be a bad leverage because it's not helping you earn revenue. Okay, so there's a difference between as a good debt and a bad debt. It's also a productive asset and a non-productive asset. So someone will tell me, what is a productive asset? Anyone?
That will generate income over a long time.
Yeah, correct. So that's a productive asset. So what would be a house in which you live?
If you
Well,
give it
technically,
on
a
rent,
non-productive.
It's not productive. Absolutely right. So this is a misperception a lot of people have, and they say that, okay, we need to have our own house. It's a good thing to have your own house, but the point is it's not a productive asset. It becomes a productive when you have rented it out, because then you generate a stream of revenue. Very good answer. Okay, we move to the next one. Let's do a quick quiz before we get started. I'm going to ask you a question, and you have to, on the chat, write your answer. So first question is, what is net worth? And the three options for you are A, it is the annual income from different revenue sources. Option B, the difference between your total assets and liabilities. And C, the total savings at a particular point in time. So with that, your time starts now, and you have 1 minute to answer. Razan, can you see the answers?
Yes, most people, actually, everybody said B.
And they are all absolutely right. It's the difference between your total assets and liabilities. So well done. Okay, question number 2. What is an asset? Option A, something you owe. Option B, something you own. And option C, left-hand side of the accounts. Your time starts now.
So we have a mix of answers, but they're mostly between B and C.
Okay, so how many said B?
I would say the majority said B.
They are all correct, because it is something you owe. That is an asset. And some people who are saying left-hand side of the account, that's debit. So debit is the left-hand side of the account. We ask 2 more questions. So the third one is, what is compound interest? Option A, interest calculated on the principal. Option B, interest calculated on loans. Option C, interest calculated on principal and the accumulated interest. And your time starts now.
Okay, everybody answered C.
Superb. That's the correct answer. And the last question, what is diversification? Option A, spreading your investment across different assets, investing in one asset, investing in foreign markets.
So everybody has answered A.
Correct. Absolutely right. So you have you're doing very well on the quiz. So that's a great sign. Okay. Now a little bit about why I wrote this book, or the manuscript, which is ready. Because after having that session that I had with the PNG alumni, the last one in May, and then there were a lot of people who have been in touch with me, not just PNG, but outside, and they have been talking about, especially Gen Z, of how you can reach a place where, you can have joyful prosperity come out of this day-to-day working all the time, long hours, and how is there a light at the end of the tunnel? Can we come out of this, or it's always going to be working for paying the bills, right? So I thought that because I also wanted to have more sessions with the P&G alumni and also take this concept uh, further, I thought about writing a book, right? And there was a few thoughts which were in my mind uh, that it's when you talk about financial freedom, when people had always talked to me when I was working for Procter and Gamble and later as well, about like a fixed sum of money. They would make it very simplistic and say, okay, if you, I'm just making it up on the numbers, if you uh, can support your lifestyle by say you need $250,000 a year, you have to have like a net worth of 4.5 million. If you keep it in deposit at 5.5%, that is the amount that is needed. That's very simplistic, because one first thing is that it just doesn't talk about like joyfulness or what that money is going to do for you. We saw that during the COVID times, the inflation was much higher. It can eat away. So you don't have that. There's that 250 will not buy you the same things that it was purchasing for you before. And the biggest link is that what are you becoming, right? What type of a person you have to be able to be earning or accumulating that much of a wealth, because you require skills, you require literacy, you require a different mindset. So that element, uh, you know, uh, made me to think about it and to write a book where providing the people with exercises, with uh, tips from people who have reached there of what needs to happen in different elements of bringing it together over time. So this is why I put it all those things in this particular book. Now, when you think about joyful prosperity, I think of it like four ingredients which are essential for achieving joyful prosperity. The first one is time. We have limited time, but the time has something which is very good, which is that it is completely the democratizer. There's real democratization is with the time. Rich people, poor people, everyone from different countries have same amount of time. 24 hours a day. No one has more or less. It's how we utilize those 24 hours determine if we are living joyfully or not. Are we achieving the financial goals that we have or not? So one thing is time. Second is rhythms of life. What are the rhythms of life? Life's rhythms harmony is found in the balanced act of of a balanced dance of the various rhythms. So when you're social connection, they help you to weave the fabric of your day. Emotional well-being will help you to strengthen. Spiritual well-being will keep you grounded. Creative well-being will inspire you. So you have different type of well-being: social, material, emotional, physical, and spiritual, right? And creative. At each stage of life, the need of each one of these is different. Like at my stage, I may have a different need versus another person will have a different need. And if you're able to accomplish those needs, you will become pleasant and you'll be happy, right? That's the idea. So second concept is about the rhythms of life. The third is a mindset. How do we have a value creation mindset? Because the more valuable we become is by creating more value for the other people. So how are we, even in our interactions in our work, are we creating value for the other person? The more value we create, the more valuable we become. So that's the third concept. And the fourth concept is about having the right level of skills and the knowledge of things, like financial literacy could be one of them. So what you do is you have limited amount of time in the world. The currency of exchange is money. You need the skills to become world class, and you have to put all this into the pot of value creation mindset to be able to achieve joyful prosperity, right? So this concept, I wanted to have this coming together in terms of like people, as they're pursuing their financial freedom goal, they are able to live in a happy way on a real day-to-day basis. And it includes things such as like integrating wealth with happiness in the concept, the joyful prosperity equation, practical tools and strategies, real life examples, and self-assessments. Okay. So in this session, out of the book, what I'm going to do is I'm going to talk about financial freedom and joyful prosperity equation. We will do a readiness assessment on financial freedom to see where do you people stand. and how different elements in the equation can be leveraged. Tips on investing in stock market, because a lot of people had talked to me last time also about like, how do we invest in the stock market? So I'll talk about that. And then a few learnings from the questionnaires. Out of the 150 questionnaires, the learnings in the book, I have 10 learnings, and I'm going to talk about 5 of those in this session. Okay, so let's start. So we talked last time also, the essence of financial freedom is the ability to do what you want, when you want, where you want, and with whom you want to do it with. Okay, so that's the whole idea. It's actual freedom to do whatever you want. If you say, I want to go on vacation, but I can't go on vacation because I don't have the vacation days. I cannot do it because I don't have the money. I cannot do it because the hotels are too expensive, or which comes under the I don't have the money part. But then financial freedom, what it does is it provides you that at any particular point in time, you're able to do what you want to do. And that you will only be able to do it if you have the money that is available to you. And number 2 is like how you're also maintaining your joyfulness, and how much amount of money is needed to sustain that particular environment which gives you the happiness, or balance your rhythm. So some people, even going to the most luxurious places may not be enough for them to give happiness. For other people, a small thing, a small dinner, at home may give them happiness. So it all depends upon, it varies from people to people, and it depends upon what actually you crave and what you want as a family, and you're able to achieve that, right? If I go with the equation, now I want to tell you that this is not just algebra that I put in. This is the way I look at financial freedom. But the most important thing in this one is what you're becoming as an individual, right? So what would it take for you to reach that particular goal in terms of like the skills, financial literacy, and the mindset, right? And these alphas that you see are the motivation. So the equation is simple. You need skills, financial literacy, and a mindset. And each of these has an accelerator, which is the alpha, or the motivation, or the drive. So we have seen so many people who would say are amazing in skills, right? But they are unable to develop get to financial freedom because they might not have the motivation to do it, right? We see so many footballers, like one of the examples is like people like Maradona, who was one of the greatest when he was in his last ages. I don't know how wealthy he was, because he was into alcohol, and there's a video on it, his biography on Netflix. I suggest you watch it. But people, because they don't have the right level of financial literacy, not investing their money in the right way, may end up in a difficult situation, right? So it also depends upon the drive. Some people say, I don't want to do anything. I'm happy with my life. That's also a choice. That's not an issue. We are not saying that anything is right or wrong. It's a personal choice. But to do anything at any stage in life, you need to have the motivation and the drive to improve your skills, to improve your financial literacy, and to improve your mindset. Our mindset, we cannot say, I am like this, right? You have to say, what are the things that can be improved? Every day in the morning, I think about it like, how can I be a better individual? Because for me, the goal of joyful prosperity or financial freedom is not about just getting to a particular sum of money. It's about becoming the person that I want to be, who's value creating, who is good in every interaction, who has the energy to do the things. And in the process, you become valuable for the others. And when you become valuable for the others will then reward you by offering you the top dollars. That's the idea of financial freedom equation, and enjoying the journey, because we don't know how long is our time in this world. So we have to use the time in living a great life. I always say that the only dream I have is like when I'm dying, I look back and say, I lived a great life. I don't have a problem going, right? Everyone has to go. So on this equation, any question before I move forward?
Just to highlight here, skills is not skills necessarily related to finance, but skills that are sellable on the market, that people are willing to pay for.
Correct. Absolutely. Okay. Absolutely. But financial skills come under financial literacy. Anything else before I move to the next one? Guys, participate so we learn from each other.
So I think we're clear.
Clear? Okay, good. Okay, so let's do a self-assessment. So let me explain. You have a paper and a pencil? Okay, so what I want you to do is like step one, on each of these elements like mindset, financial literacy, and skills, right? Rate yourself, your capability from 1 to 10. And this is, you're doing it, no one is seeing it. You do it as per, what you believe is your right level on each of these elements. So say, for instance, I say that in terms of my skills, which enable me to earn money, I'm a 5. I'm not that great. Okay. Or you can have it like on financial literacy, you say, I'm still learning, I'm a 3, or you say, I'm an expert, I'm a 8, 9, I'm fantastic. So you can rate it 10 being the highest, 1 being the lowest. So you rate each one of those. So skill, a score, mindset, a score, and financial literacy, a score from 1 to 10. Done? Once you do it, let me know.
Yes, I'm done.
Okay, good. Then assess your motivation. So, and the motivation scale is from 1 to 3. You say, I'm highly motivated, that's 3. I am like, okay, not very much pursuing the things that I put in front. So that would be 1. And on each of these elements, like you say, I'm really, really motivated and committed to in making my skill best in class in the world. So I work very hard towards it. That would be a 3. If you say I work somehow, somewhat, I'm 2, and I really, whatever I have is good enough. And you do it for each one of them. So because we said alpha 1 into skill plus alpha 2 into financial literacy plus alpha 3 into mindset. So you give us a scale of 1, 2, 3 for each one of these. Okay. Done?
Waki, can you say a little bit more about growth mindset?
Yeah. So I call it the growth mindset, or the value creation mindset is a mindset where you are focuses on creating value for the other people and value for your own self as well. So an interaction that is happening right now. So you come in and you're say, for instance, you're learning about financial literacy. You come in fully engaged. You want to learn the things. You're asking the questions, that type of a thing, because you're creating value every session, like 10 minutes or 1 hour or the whole day. You're creating value for other people, and you're creating value for yourself, and you're growing as a person. You're not looking at just the failures or the problems that happen. You always think in terms of a growth mindset, that how I can develop and improve and become better individual, that type of a thing. So you're not bogged down by the challenges that come to you, but you rise and you seek like what type of information and what type of knowledge I need to have to be able to overcome these challenges. And you're always breaking the box of limitations or the old frames that you have. You're going beyond your frames to widening your horizons. That's what I mean by growth mindset or value creation mindset.
Okay, so mindset in relation to financial freedom and that. Okay, thank you.
So now what you do is, once you have like the ratings, you multiply your motivation. So what is your alpha? Whatever you gave the score, like example here, rating 1 to 10 times motivation 1 to 3, whatever you have assigned. And then like say, for instance, you have assigned skills, you gave it 7, and motivation you gave 2, then it becomes 14. On a value creation mindset, if you're saying skill is 6, motivation is 3, then it becomes 18. Financial literacy 8 and 1, it's 8. Got it? So if you can do that and then do a mega mathematics, which is add all of them together. Actually, I'm asking too much high finance, no? Addition is a big task. I don't want to look at the scores, but what I want to tell you is this is the scorecard. So if you're already between 45 to 90, you are doing very well. You have a quite a huge potential to get towards the goals that you have, like in financial freedom. If you are between 25 and 44 medium level, you need to think about like how I can improve maybe on motivation or one of these elements. And a low score of 10 to 24 means more work is needed. So there are people, champions who are above 45, 90.
Yeah, there's like a couple.
Good.
Just barely reach 45, so can't say
Good.
champion.
That's good, Salman. But keep focusing in. And the important thing is not the score. The important thing is look at it where you yourself assess and then try to improve on the areas, all the areas, of course, but even try to do it like after 6 months and so on to see, are you making progress on that? And also get inputs of the other people, because your calibration is based upon the place or where you are at this point. Try to have it with people who are maybe at a higher level in their journey and how they look at it. So it's all about like, one is my own calibration, and that can also be very hard, or it can be, lenient, but getting a perspective from other people as well. Like we all get performance appraisal, so we know about our skills. That part at least is an easier one, but other one like financial literacy and others, but try to have it like a pragmatic view, because the idea is the journey. It has nothing to do with the score, but a score is just a way of making you think about the skills, financial literacy and mindset, and about the motivation that people have. Because motivation, I see that a lot of people, they may have some skills also, but people say, I'm busy, I'm tired. But busy with what? Like, right? If you're not thinking about the key goals, and if you don't have the goals clear, you will be busy, but you'll reach nowhere. So it's very, very important to be very clear on what you want, what gives you the joyfulness, and then you work accordingly. Because at the end of the day, the job is not a job itself. It's more about earning revenue, right? When people, we have to say when we are working, like, it's a passion, I have this passion is okay, there it is, right? But at the end of the day, we are waiting for our salary, our paychecks, because if we were so passionate, we will work without money, right? But none of us does that. So being very clear and what gives us the pleasure in our life, because life is short, that is the key thing. So the first element of the equation is skills. And I quote Jim Rohn. He was one of the greatest personal development guru of the 80s. And he said that your net worth is directly proportional to the value that you create for others. The more valuable you are, the more would be your net worth. So we all see it, like Messi. He has won so many awards as the player of the year so many times, because his skill level is so amazing. Like the way when the ball comes to him, look at him, the way he moves, right? He won Argentina the World Cup. Before that, he has won his club many times. And also Argentina in the Copa Americana, he made them win that also. So his remuneration is directly linked to his skills, his ability to enable the teams for which he plays to win. And the path to financial freedom in terms of the skills can be in different ways. Specialization. An example is athletes. Short put, you are running, you can be an expert in any of the specialized places, or sports. You can be an amazing player in cricket like Virat Kohli, or you can be an amazing tennis player, right? You could be influencers. Leadership, CEO, CFO, CHROs, chief marketing officer, and so on. If you're leader of a big company, you can make a lot of money through your bonuses, through your through the stock option and so on. The third thing is diversification. You are becoming an investor, you have investments in different places, you are a multifaceted performer, you can make a lot of money out of that. Or you are a technical mastery, which is excelling as top surgeons, successful fund managers, or you can be an entrepreneur. Entrepreneur, though the success rate of entrepreneur is very low, but if you're successful as an entrepreneur, you can make a lot of money, right? So that then your goal of a financial freedom is not only achieved, but it can achieve it for the generations to come. If you were like the founder of one of these big companies, right, it becomes big, but that requires a much more effort. So if you think about the alpha in each one of them, the highest level of motivation, drive, effort, and ability to keep your mind going despite the failures is entrepreneurship. That's why the success rate is so low. But when the success happens, it's so big that it doesn't help just this individual, but it's generations to come and people. Like imagine amazing companies like NVIDIA. How many people have become millionaires because of that company? And I'm talking about employees. You do it, like you can go on ChatGPT or go on Google and search it. It's amazing how many people have become millionaires through NVIDIA. So it's not just about the person who created it, but whole set of individuals, plus the people who have invested in it. So that is the power of entrepreneurship. And unfortunately, we are not taught that when we are in our schools or colleges. We are taught about, I don't know about now, but there was a time when we were not. You don't have a separate section which talks about just entrepreneurship. It's more about like you're preparing people for jobs. It's different, but it's also easier. Doing a job is much easier than starting something on your own. So that's the skills. The second part is financial literacy. And in financial literacy, we already talked about some basic concepts in the last session. And here I want to focus on investing in the stock market, right? So the first step in investing in the stock market is selecting the investment field, because we have so much available to us. Let me give you a little statistics to whet your appetite. You know how many stock exchanges are there in the world? The recognized ones are 60. Okay. And then within that, you have economy is generally broken into 11 sectors. Okay. With 24 industry groups. Okay, and 69 sub-industries. And then you have like about nearly 43,000 listed companies as per the global industry classification standards. And you have about more than 120,000 mutual funds and 1.3 million bonds. Imagine if you're just going into this area of stock market, it's not possible to even evaluate all of those, right? Likewise, there will be the same thing if you're going to real estate. Real estate where? Real estate in the US, real estate in UK. And if it is within UK, which place within UK? Is it London? Is it Manchester? Where? Or in Dubai? Like which place do you want to go with? Then you have like the art, contemporary art, classical art, then going into startup, what type of biotechnology, which type of industry. So you have to select the investment field. And one of the things which I suggest is that the best is what investment interests you. Like when you're thinking about another, one easy way is like when you're buying, say, for instance, on a stock market, what are the products that you're using? So if someone is using Apple phone, Apple computer, Apple, and you think that it's an amazing innovation, then it becomes easy. You might say, oh, I focus on Apple because I am a consumer and I like Apple because I believe this has the best innovation compared to Samsung or any of the other ones, right? If you believe that way, that is an easy way. So you are at least bringing your universe down to something which is more penetrable, because the next step would be that let me look at the fundamentals as well and so on. But you need to be very clear in terms of what is your investment horizon or investment field. You cannot say, yeah, I do a simple diversification, some real estate, some stocks, some crypto, some art, some startups. You can also do that, but you're doing it more as if like, okay, I go to a candy store and I say, give me the blue and pink and red, and I have a nice, assortment. But do you understand each one? And for any one individual to know very well real estate, stock market, crypto, I think it's amazing. Like I don't think so. I haven't met someone who has that much knowledge ingrained, because you can make money. People make money even on horse racing. That's not the point. You can be lucky. But if you're a proper investor, you're not becoming like waiting for your luck to happen, but you're doing based upon fundamentals. And we're going to talk about those. Build knowledge. That is your biggest friend, your knowledge. So in there, what I'm saying is deep understanding of the investment landscape. What are the assets that are within that particular area in which you want to invest? And what are the collection of assets? So when you're looking at the stock market, you're very familiar with the automotive industry, or you're into AI, or you are into the consumer appliances, or you're very much into consumer products or whatever. Consumer products, Procter & Gamble people would be more familiar with. Understanding of the assets you select for investing. So if you pick up an Apple, let's take an example. Do you understand Apple's business model? Do you understand fully what are the innovations that are going to be coming in based upon their earnings call, because they make forward-looking statement, plus they have like they provide what is to come in the future and so on. What is your risk tolerance? Are you at a stage where you don't want to lose your capital? You want to preserve your capital, and then even if you make like 5-4% returns, that is good enough for you. Or you are at a place where you say, okay, I can take more risk right now. It's not a problem. Then your profile and your investment will be very different, right? And the ability to analyze the asset, that's the biggest thing. If you are unable to do it, you can ask someone. If someone is doing it for you, then the banker is not just saying, okay, I have this. You say, help me, please analyze this. And I want to have that analysis available to me. This is an example of I did it a simple developing a portfolio. So generally when you go to the banks, they will ask you, are you like based upon if you're conservative or you want low risk, they will make an equity of say 28 to 30%. You have bonds, 59% bonds have lesser risk, alternate investments and cash 3%. If you're a moderate risk taker, it will be 39% to 40 in equity, bonds, and then you have alternate investments. And if you have a balanced is this, and if you're a growth, meaning like you're willing to take risk and you want to really see a fast growth in your portfolio, you're going 85% equity, right? Bonds only 9, alternate is about 5.5, and cash 0.5. So you're most invested in the marketplace. What I have learned about 25 years of investing in the market, what I believe is like you need to have ammunition available to you. Meaning like I don't like this 3%, 4% cash. I keep like at least 40% cash. And why do you keep 40% cash? Not because I don't want to be in the market, but when the market fluctuates and goes really down, that's the time to buy and buy good assets. Like it's the same as when you say like you have Giorgio Armani or is on a sale, right? That's a 60% sale. What would you do? You'll buy it, right? If you like Giorgio Armani. The same is this with the stocks. Like if Apple was discounted at 40-50%, why wouldn't you go and buy it? If you believe that it has a sound fundamentals and this is like just the panic or the fear in the market is driving the prices down, then, and its intrinsic value, which is a concept which we're going to look at it, if the intrinsic value is much higher, then what is the risk? Go for it, right? So that's, you need to develop, if you're developing a portfolio, this is an idea. Then analysis. There are generally two ways in which you analyze investments. One is the technical analysis and the other is the fundamental analysis. I personally go for fundamental analysis, which is looking at the company, its balance sheet, its income statement, looking at macroeconomic conditions, what is the future outlook, and there are many, many analysts who are anyway covering all the stocks and you can see it, right? If the stock is like something which is considered a big stock like Apple and Amazon and so on, many analysts. You can go into JP Morgan, Morgan Stanley, you name it, and they will all provide the perspective like it should be buying or hold or sell. Technical analysis is more like, it's more mathematics. It's more about like you're looking at the candlesticks or you're looking at how the stocks have performed. And the logic over here of the technical analysis is that the movement of the stock price is determined by the collective action of the entire stock market. Okay, so they think that this is the collective wisdom which is making it go up and down and below, right? So there are people who are experts in technical analysis. I generally don't go with technical analysis. I believe in more the classical fundamental analysis. Look at the balance sheet, go for the quality assets, and even if it is down now, you have a long-term horizon and it will come back if it is a good quality stock and you'll earn a good return on it. Then we talk about selecting the assets. And if this is personally like what, it's just a small excerpt of the request I make my RM to provide me with the details before selecting a stock. So security name, I made it stock A, subsector electrical components, year-to-date return. What has been the return year-to-date? 12-month average upside potential. What is the upside potential of the stock? Intrinsic value is the, if you sell the company at today, what would be the value of that company, right? The basic value. So if you have like two things, like you make a, let's take an example. You prepare a house and the house costs you 100 to build land and everything, right? And you get a price of 200, means there's 100 is a profit, right? But the intrinsic value of the house for you was about 100, and you're getting a 100 as a gain. So for the stocks, also, if a company like Apple, what is the intrinsic value? You go into the balance sheet, you look at like what is the, or you take a discounted cash flow of future stream today, and then you say, okay, what is the value of that? And that's the intrinsic value of the stock or of the company. And if the market value is below the intrinsic value, it means that's a great opportunity to purchase. Then you have the indicative dividends, how the dividends have been paid, net debt to EBITDA, return on common equity, and then what is the WACC related to ROIC, trailing 12-month sales growth, how fast they have been growing. So this stock is growing 1 and 2%. And then why is the market value is below intrinsic value? So it's, in this case, it was robotics, automation, it's catching up and so on. So actually, if I have to, I couldn't have put this onto one sheet on if the things that I ask my RM to prepare for me, right? Or the the banker to do the stuff for me, because the more information you have, and this is not just 2 stocks, he makes me like at least 30, which I have already, have some knowledge about. And then he sends me sheets, which are like 2-page complete analysis on each of the stocks. And then I would pick one of them or 2 of them, and then wait another some time to go for other ones. So it requires a lot of analysis, and it's not that you have to do it yourself, but get these things, you need to be familiar with it. Like what is happening, why? You're not putting your money, because otherwise enjoy a little bit, put it on a horse, go to the horse race, at least you'll have a exhilaration. I have been on a horse racing many times, Shartin and Happy Valley in Hong Kong days. And I tell you, I have no clue. And even then I won one time. But that was not like any thinking. Even horse racing requires a lot of knowledge. So these people who are really experts in it, they look at the history of the horse, they look at the history of the jockey, what is his weight, what is the weight of the horse, was the horse sweating before the race or not? It's a science they have completed. So knowledge, that's what I'm saying that we need to have. Another book that I would like you to read, if you're interested in intrinsic value, is The Intelligent Investor by Benjamin Graham. He's a guru of value investing, right? So when you're selecting the asset, the intrinsic value, this is the equation that he gave, because it's very difficult to get to to discount the future cash flows. It's not easy to get that. So he came up with an alternate way of developing this. So EPS is the earnings per share times 8.5. It's not 2.5, it's 0.5, which is P of a zero growth company. The companies which have a zero growth, their price to earning ratio will be 8.5. And growth is growth rate for the next 5 years, and 4.4 is the average yield of AAA corporate bonds. And Y is the current yield. So if you have this elements in the formula, you can easily construct that. And what this shows is that here you have the intrinsic value. This is the dotted lines, right? And you have the stock price, which is Mr. Market, is going up and down, up and down. This is how it goes, right? And the margin of safety is the green. So when you have the intrinsic value is higher than the market value, what does it mean? That the stock's value is higher than what the market is placing value on it. And this happens because of fear. People are saying, oh, the market will collapse, everything's going. So they're selling. So this is you can buy it at a discount. This is a beautiful place to buy. And that you can get to if you know what is the intrinsic value. And that's what financial literacy helps you achieve, to make better decisions. It's not about like, it's rocket science or anything. These are simple concepts. The more you get into them, it will equip you to become a better investor. Okay. And I've explained a lot in detail in my book, each and every of these in steps, so that people can understand it better. So let's look at an example. Hypothetical company ABC Corporation. Earnings per share is 5. Expected growth rate is 5%. Current yield is 3. Average yield generally remains the same at 4.4%. So it's like a constant. And you apply it in the formula, it comes to 135.67. The value, the market value of ABC Corporation is 100. So you have a margin of safety of 26.3%. What does it mean? Is that even if your calculation is not right, you have a safety margin of 26.3%. You cannot be wrong. The lower price will gravitate towards at least its intrinsic value, if not more. So you have a gap, like your market value is 26% less. So it's a discount. You're getting a discount of 26%, even if your calculation was not right. The more you have the margin of safety, the more protection you have. Getting it, or it's getting complicated?
This is beautiful.
Okay,
Very,
thank you.
very clear.
And I've gone into.
You're gonna share the slides, right, Wati? Afterwards, we can share
I
them.
will. You will share the book. The book has even more details of everything.
Got it.
Okay. So we move forward. And then the sixth step in any investing is give investment time. Incubation. We cannot be there. All this become rich fast. It's like it's a farce. It's a trick. It's getting the people. It's cheating people to say that, okay, there are people like on YouTube, you can see it, like I have the Ferrari and then he's selling $10 course. You say, okay, if you're having a garage full of Ferraris, why are you selling $10 course, right? But that is where people are, and because of our greed, we just start believing that, yeah, let's go in and invest behind this. But why? What is the fundamental behind this? No, my friend told me. That's not good. And then on top of that, you're not giving time. Like I give you an example. Right now, stock market is down. I have invested in stocks and only in 3 stocks. And then the remaining, I keep it in cash, because in cash, even you get 5.5% in the US as a return on dollar return, which is very good. And the stock prices have gone down, right? And the market price is lower than the intrinsic value. So I have invested more right now because I can see that it's a discount. Now, when you look at your net worth on at these times, you say, oh my God, the money has gone lower. But you need to keep calm. You say, okay, these things take time. We didn't become like the people we are in one day. It took time to do it. Even when you go to a gym and you start doing it, the transformation doesn't happen after the first session. It may take a year, 2 years, more, right? So all these things require time, and we have to give time to any investment. Like even in the real estate, people are, again, everyone wants to have quick. So people also try these things like go in and invest some money in the first installment for a new project that is coming in, and assuming that by the second installment, I will exit the position by paying, and the price will go up. It may not go up also, right? But if you allow time, and if you can, that's why the younger you are and the earlier you start saving, you are more likely to reach your financial freedom target. Because it requires incubation, it requires time. It will be, that's what is needed. The third element of the equation is mindset, whereas we develop a value creation mindset. Now, some of the things that we have to protect our mind from in our quest for joyful prosperity is procrastination. We say, yeah, we will do it tomorrow. Yeah, we have time. We don't know how much time we have. That's the one thing we don't even know. So anything that has to be done now, fast. No procrastination. And that is a sort of a, what they're saying is like, there was a researcher, his name is Steele. I forgot his first name. And he did a lot of research on this. And he said that there is a 300% increase in procrastination in the last 40 years. Unbelievable. This is because our spans have become really short. I've heard people say, yeah, I don't talk too long on margin of safety, and others tell me in one line. Really? You become like have you become an expert, like whatever you're doing, marketing or whatever, by learning these one-liners? It's like how much time you invest in anything will make you make you that good. And also you cannot procrastinate. If you have to take something, just do it. Go and do it now. If you start doing it, initial step is always the difficult one. As you start practicing, it becomes easier and easier and easier. And even for the mind, what does it say? To form a habit, you have to do it 21 times. After 21 times, it becomes a habit. And the first thing when you're like, which is a great example that is given by a lot of people, is that you make, we all make New Year resolutions. And then you say, okay, New Year, I'm going to start my new diet and I'm going to do gymming in the morning. And the first day in January, in places where it's cold, you're nicely tucked into a quilt and the temperature is perfect. 6 o'clock, your alarm goes off, and then you say, oh my God, mind tells you, keep sleeping, we'll do it tomorrow. And then you said tomorrow never comes. And if you just go out and just don't listen to the mind and do it, you'll be able to start doing it. And once you get into the habit, then the mind will become your supporter instead of your nemesis, right? Second is self-doubt. I've met a lot of people, and sometimes it happens to me as well, that we say, I'm not that great. Someone else is better. Why? We were all born similar. It doesn't matter where we are from, or, we both all have 2 hands and a nose and eyes, and we are all the same. It's how we are using the 24 hours in a day which determine how good we would be. So don't doubt yourself. Never, ever doubt yourself that you are less capable than anyone else. This is a huge issue in terms of the value creation mindset. This hierarchy of like stacking ourselves into capability based upon the corporate hierarchy. That's another issue. That a person who's like higher in the hierarchy is considered like they have more brain. It is not. They have also come through the same hierarchical lineup, right? It's like what they have achieved in terms of the results, which put them in a higher position. But that doesn't mean that they have all the capabilities on all aspects. No, there are a lot of things which are involved. So never doubt yourself. And the third, which is the biggest thing, which I believe, is fear. Fear is the biggest barrier to growth. And that's why I had my company also named Courageous Minds. And I believe that courage is the greatest attribute that one needs to have. So how do we get to the value creation mindset? It's not going to happen out of nowhere. So you have to develop positive rituals like exercise, diet, breathing, becoming a zapper. What is a zapper? It's a concept I used to talk in P&G also, like sapper and a zapper. Sapper are people, after meeting them, you say, why the hell was I born? Why did my parents bring me to this world? Because you get so disappointed and discouraged, right? And then the people are zappers, being like people after meeting them say, I am the best thing after discovery of sliced bread. That is a zapper. So if you'd like to be in the company of the zappers, then you yourself should become a zapper, right? So when you become zapper, you have the energy, not by giving energy to the others, you're getting energy yourself. Critical thinking, and critical thinking is about asking the right questions. It's not about coming up with solutions. We have been taught in school that whoever answers first gets a higher grade, because the teacher would say, the instructor, yeah, well done, you have the answer. And the answer is like you have, memorized it like a parrot, and then you're just giving the answer. So 2 plus 2, 4 immediately, right? But the critical thinking is more about asking the right questions that make you think, to penetrate, to analyze the situation, to come up with newer out-of-box solutions. It's all about critical thinking. The other one is gratitude, is being grateful for the things that you have. You can build upon your financial freedom and prosperity on the foundation of gratitude. Whatever we are is not because of our own doing. It's because of a lot of people who have enabled us, people in our family, people in our friend community, people, our teachers, people we meet in our organizations and everything. So we have to have gratitude for everyone. That's the place where we should start from. Practicing your reaction to situation. Provide affirmation, because our mind is like a recorder, and the way things have been programmed into ourselves, we just react to situations in a particular way. So we have to take a break, need to understand what our reactions are, overstated, what are the reactions which are causing us problem in the pursuit of our goals in terms of financial freedom or whatever goals you have, right? And that is the way of continuously improving ourselves, because it's a journey. It won't happen in a day. It will take time, but we will all be able to do it if we continue to consciously make an effort to do that. Is that clear? Any
Yeah, what you
pearls of
mentioned,
wisdom?
how difficult it is in the beginning. So let's say that you don't have experience in investing or in managing your finances, then the self-doubt and the fear are huge. So what is the best way to get started? Because I hear you saying once you started, it's like a snowball, you start, you keep learning, etc. But how do you get over that initial barrier?
Okay, so if we keep this specific to investing, right? The question. If you keep it specific to investing, I would say start reading, read a lot. Then focus on a few assets, and then don't invest in the asset, but try to follow those and see, if I was doing this, what would happen? And you can create a simple sheet which can monitor how the asset have been progressing the price, right? And that will give you the understanding. And you say, oh, okay. And you're watching it, you're seeing, okay, Apple went down and relative to the market in this way. Why did that happen? You follow their earnings call, what are the analysts are saying, and slowly you're gaining knowledge. And with the knowledge, you're getting insight, and you're getting like a lot more perspective, like a few. And that's why you want to have fewer assets, because you can focus on them. So for me, I follow this asset like Li Autos. It's not doing well right now, but I know really as much as what is available on the net. I know everything. Every day, I take a few minutes to just read it. What is happening? What is new? How many cars did they ship in the month? They provide that. CV Post provides that. So you get into that as if like you are a member of that. Like in Procter and Gamble, we used to do it like, but we were employees. You knew what is the sales for the month, and the closing, what has been the profitability of a particular business and of the company, and so on and so forth. So you have to, that is the way to do it. Just get in there. And another thing I would say is like really good. No one can become an expert unless they fail. When you're doing it, you lose money for sure. Even the experts lose money. But the point is the ability to recover that loss. That mindset is needed for becoming truly a champion.
And so kind of for stocks, you can start investing small, but what about for real estate, for example? Because that feels like a really big chunk of money in a big step.
Yeah. And there I would say, like, first you can set a target. You don't have to buy a big property, but you can start saving for that. Stock market can also help you in that way, because if you're making money in stock, you can then take it and put it into real estate, and you can leverage in real estate by taking a mortgage out. So you have to pay a 20% or whatever is the principal amount, and the remaining is you get it through mortgage. So everything has to have like a journey. You have to set the financial goal first, like the thing that we talked about. The first thing is setting a goal. What is it that I want to achieve? And then you bring it back. What are the skills? What is the mindset? What is the financial literacy I need to get towards the target? So if the target is that house, you break it down into how much money is needed and how much will be the mortgage, and how do I get there? My skills are at that level that people are willing to pay me more? Or what is the skill that I need to enhance it into? How can I make it world class that people pay me more for that? Or what is the financial investments I can make on the sides that it can also multiply that stuff? And what type of mindset is needed to achieve that? Breaking your own paradigms, limiting paradigms of like, this is the best I can do. Life is very difficult. People are losing job. I'm at least making this money. This is all like, this has to be broken. I just give you one example from my life, and I've written that in my book also initially. It's like when we form certain frames. So when I was studying in my high school or early college, I used to get 5 rupees a day. Okay, 5 rupees is like some cents in US dollar, but for Pakistan, it was pretty good in 1987, right? It was pretty good amount. So that amount was enough, the 5 rupees, to allow me to sit in a rickshaw or a tuk-tuk, right? To reach home, because the buses in Karachi were like really, really bad. And in the summer, it becomes really horrible. So 2 days in the week when I didn't have the physics practicals, my college would be over by around like 1 o'clock, and I would be in time for lunch at home. So that was good. 5 rupees was doing me good. On the days when I had the science or physics practical, which used to be at like 4 o'clock, I had to have food, lunch. So I would go to a place where, they had this skewer of a kebab along with one naan. That would be 5 rupees, okay, without any cold drink. But that meant that I walked 10 kilometers home because I couldn't take the rickshaw. So that taught me the law of substitution, that you take one thing versus the other. Now, what I was thinking is like, that is my frame, because I was taught even in my in the family or in the community, it wasn't considered good that students should work, because it's considered as that they're doing labor. They should just focus on their studies. So what I could have done was, I was really good in mathematics. I have record for Pakistan, 100 out of 100s, which is no one can break it, because it's 100 out of 100s, right? Multiple years. And I could have easily, and there are many people who struggle with mathematics. I could have given while waiting for the physics practical, I could have given a tuition to some of the people get the money to use a rickshaw every day, or a taxi maybe every day, and also eat the kebab every day, which I like so much, right? So, but that is a frame. The example I was giving is like, because we don't think, we think in just linear way, what we have learned, because we gravitate back towards the comfort zone of the things we know how to do. Unless we break that particular paradigm and deliberately go, like I give you another example. When I left ProSieben after P&G, and I said, I'm going to start a consultancy. At that time, it was a very, very big decision, because at that time was the most difficult time, because both my daughters were in London getting the education, and we were in Switzerland, which is an expensive place. But I said that I was like 46, 47-year-old, right? And I said that if I have to make a change, it has to be now, when I have the energy. And I don't care. Like, and I had offers from Sanofi Avantis and another company, but I said I'm going to do on my own. And I tell you, like, a year was horrible, really horrible. Like, especially in Switzerland, because I couldn't speak French, right? So it was difficult. One time I remember that I used to walk, because I love walking, and I could see the same leaf every day. And one day I said, is this going to be my life? Keep walking and seeing that leaf on the pavement, right? Every day. But of course, I was invested and I had those things. And that's where I decided that I'm moving to Dubai, because at least then I will be first cutting my expenses. And then on top of that, I will be able to speak in English, the language that I can do. And luckily, God is kind, things happened, consultancy work, my children's company is doing really, really well. But what I was trying to tell you is that it starts with an intention, starts with a belief in, if you believe in God, okay, that's what I believe in. And then number two, in your own capability. There will be days which will be very dark. There will be times which would be difficult. But if you have the courage, and if you have the belief, you have the intention to learn and rise, you will be able to do that. People have done much bigger things. So what are we? We're doing like playing with small things. People have climbed Himalayas, and they have done so many things, right? So important to work on yourself. If you want to invest your first dollars, before you invest in your stock market or into a real estate, invest in yourself. Are you becoming a better person every day or not? That is the biggest investment anyone can do. So we move to the next one, and then the alpha, which is the motivator, and I think Desi did a super job of explaining it, that it's not just about motivation, but it's about taking action. So that's what it is. I'll move to the next thing. So what are the limitations? Now, we talked about the financial freedom concept. It has a few limitations, and that's why I want to go to the joyful prosperity. One is fixed amount for cover for needs and inflation. That fixed amount is never, one thing is it's never enough, right? It keeps changing. Inflation can be high, low. Interest rates keep changing. Today, the interest rates in the US are the highest since 2001. You can get between 5.25 to 5.5. Right? It's one of the highest levels, and they went really high post-COVID. Then you have inflation and location are important. So inflation can be high. It was in the US, it was above 9-10% at one point. Now it has been tapering down to 2 point some percent, still hasn't reached the 2%. Location, if you're living in Karachi or a Dhaka, or you're living in Switzerland, Geneva, it's very different, the amount of money that is needed. And it's generally people always view their financial freedom in relation to retirement. By retirement, if you're retiring at 65, already you have lost most of your life, right? God gave everyone like a long age, and I wish everyone lives 100 years or whatever, but it's not the same. So if you're waiting to enjoy life after retirement, then sorry, first, we don't even know if we will be there till retirement. And what do we do with, even if we have huge amount of money, if we cannot use it? And there is no mention of joyful living. And that's why I don't like the concept of financial freedom. And that's why I came up with joyful prosperity. So what did I do in the equation? I keep all these elements in the denominator, right? And I say all this has to help in life satisfaction by getting your rhythms balanced. So if you like to do, because there are certain things which we take it from others where people say, okay, work very hard and then I go on a vacation. Yeah, but like what? It's like not from a prison that you go, you have given a time of like 1 week, you have, or 2 weeks or 3 weeks. That's the only joyful time. And then you go back to doing the things. You have to enjoy every day. And you have to find the things that are important for you, taking the time out to do those things. And it is not like because your boss believes like this, what you believe, things actually provide you the highest satisfaction. I give you an example. 1 hour of breathing, which maybe like people say, okay, we breathe all day. What is amazing thing that you're doing? But conscious breathing for 1 hour, I spend a day. And one of the greatest things I've achieved, I believe, in the last so many years is, for me, is that flexibility of the time to do what I want to do. I do breathing 1 hour, then I do 1 hour of exercises every morning before my breakfast, right? That is a joy for me. Or making tea for my daughters is a joy for me, right? So that is, and in my culture, if I tell someone, they will say, oh, they should be making tea for you. I said, no, it's like the joy I get out of making it and having tea with them is like, it's fantastic. So whatever that thing may be, so it's life satisfaction, and this equation has to be more than one. So the effort that you're taking in creating the money part has to be, the satisfaction has to be more than that. So at every stage, you're enjoying it. So you're not just focusing too much and putting all your time in getting towards money, and you're not doing the thing that you want, because you never know if you'll get it or not. Now, the last thing I want to talk about, the 5 of the top 10 learnings. Now, in the book, you'll get a lot of stuff which are in detail, but in the interest of time, I try to just pick the few things. So the first thing what people talk about is, like they say, be the best in what you do. I really love that. So right now, if I ask you, say, oh, I'm an amazing, accomplished executive. You are good, can be anything. Are you good on a family level? Are you good on a neighborhood level? Are you good on a community level? Are you good in a city? Are you the best in the country? Are you the best in the region? Are you the best in the world? How good you are. Napoleon Bonaparte was the best in the world. Messi, arguably, might be the best in the world, right? So then the creation of your wealth will also be in relation to how good you are and how good you are at creating value for the other people. When you work for a company, you have a position, whatever that position is, and they're paying you because you're creating much more value for the company. Otherwise, the moment you stagnate or your money goes too high, and you can get a fresher, younger person who can do the same amount of value creation with lesser amount of money, you get a package, or if you're lucky, or otherwise, you have to move on. Someone else replaces. So how good you are, that's why it's so important to continuously hone in on our skills, to be the best in whatever we do, whatever that would be. And that we should make it as a way of life. Interactions we are having, we're completely engaged in that discussion. You're talking to your wife or your husband or your child, or you're talking to your friend. At that moment, that person exists and nothing else. It's not like, yes, what did you say? Thank you. No, it's being into that moment, being great. So the person says that moment I spent with that person was like amazing. It was really good. And that you're creating, your space in a person's mind and heart, which is of huge value, because when they think about it, they'll say, oh, that person, we need to do something for this as well, right? And this is how life goes. So be the best in what you do, whatever that may be, and try to make it like in every interaction, and you'll see your life will change. Second thing the people said is that, especially people who achieve joyful prosperity or financial freedom, they said that the whole intent from where it started was protection for the family. It all started that we don't want a family to go through some of the challenges that we went through when we were younger or when we were, growing up. So we don't want to have those, and we provide the best of the best to our family. And that's motivation, or the fear positively acted in terms of them taking action. Right? So second was protection for the family. Another thing which people talked about was start early and be consistent. So I've written stories also. Some people have agreed that their names can be, or their stories can be shared in the book. So I have those. So one is a friend of mine, but he's much, much older to me, and he's been very successful. He used to be the president of one of the biggest Fortune 500 companies. And he was telling me that he lost all his money with the dot-com bubble in the US. He was there in the US. And he said that, but it was still okay because that was early part of his career, right? So he was able to again build up all the money, and then he became really, very prudent in terms of taking risk, and then he was able to create much more, because as he was also climbing the corporate ladders, and he did really well. So the earlier we start, the better we would be in terms of achieving our goals. So even if you start putting smaller amounts and saving them, and then putting it into any stock or putting it into whatever real estate, or it will grow exponentially over a period of 10 years, 15 years, 20 years, 30 years, right? So it's start early and be consistent. The next one is risk management. And risk management, as it is taught, is not like don't take risk, is having the analytical ability to assess the risk and reward of any investment, and working closely to mitigate the risk and to accentuate the upside potential. That's the beauty of a real good investor. Beauty of a true finance guru type is not about like, I will not take risk, or just sit in a meeting and say, no, we should not do this because it's risky. No. How do you mitigate the risk? And how do you make it like milestones in which you're going to help that? And also making the upside come true. How high is up? So how do we get to that level? That is the quality of risk management. And the fifth one is develop a positive and value creation mindset. I cannot emphasize more that the best thing is working on yourself, and within yourself, it's on your mind, because that's what we are, mind. If your mind is your friend, you will be able to achieve anything. If your mind is not your friend, it can create a huge issue. What did what was his name? I forgot his book. It was a Russian writer. He said, the mind in its own right can make a heaven of hell and a hell of heaven. Right? I don't know if it was War and Peace or Anna Karina, one of these books. And he wrote this line. It's amazing. It's your mind, which can make you feel free, make you feel happy. It can make you feel sad out of no reason. So those are the 5 learnings I just shared out of the 10 that we have. And then the last thing I want to say is like, what is to follow? If we have a next session, is I want to talk more about skill self-assessment. How do we know where do we stand on a skill level? There's ways of doing that. Mindset exercises, how to create a value creation mindset, how to incorporate rituals, deep dive into leveraging financials and making decisions. How do you actually use this for making decisions, and sharing some of the inspiring stories. But, the journey may look far, but if you start progressing towards it and you bring about a change to yourself and you make that goal set for you, you'll be surprised how much progress you can make and how fast you can go towards that destination. So focus on that, leverage all the data, knowledge which is available on the net, available in the bookstores, available with people, and use that in terms of improving yourself and investing in yourself to become great. Because at the end of the day, the idea is not about just having a sum of money and then, because anyone at the end of the day, we have an experience of life. You move on. But it is what you become in the process. That's the most important thing. It's what you're becoming. It's not about what you're having, but what you're becoming as an individual. And that is the thing which actually motivates me the most. Is like, what do I become in the next 10 years as an individual? And then within that is the financial freedom goal. And during that process, how can I enjoy myself to the best of what I can within the means I have? And I really enjoy speaking with all of you, and I love to share whatever little knowledge I have on the subject. I'm myself a student in this area, but I do believe that by talking and sharing your ideas, you learn a lot as well. And I enjoy this thing. So thank you so much.